Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
This is Daybreak Asia, and we were reflecting a couple of days ago about this blitz of economic stimulus unveiled by the PBOC in China. Several key interest rates are being lowered, the level of required bank capital being reduced, so theoretically more lending is possible, and there will be support for both the housing and equity markets. Seems to be a pretty comprehensive plan. Will it be effective? Let's take a closer look now with Peiqian Liu, Asia economist at Fidelity International, joining us from Singapore. Peiqian, good of you to be with us. Give me your assessment on what the stimulus is about and how effective it may be.
Thank you for having me today, Doug. And on the China stimulus, yes, they delivered quite a bit of upside surprise in terms of incremental easing. And I would expect this package to overall lift the sentiment and on the margin boost economic growth. And now in more of the details, I think there are elements of upside surprises in the package, as I mentioned, but more in terms of how they deliver the package. Because previously, they have all been adopting a gradual incremental announcement approach, but now delivering multiple easing policies at one go will be one of the supportive measures to support market sentiment. And on the property sector easing specifically, I think that incremental easing is more skewed towards supporting household demand. So I think that demand side stimulus is also picking up pace at this moment.
So when you look at the data, whether it's retail sales or even the degree to which consumers in China are stashing cash in their bank accounts, how would you profile the Chinese consumer right now? Help me understand that. Now, I know that that's kind of a broad category. There's a range of incomes involved, different jurisdictions. Some people live in the city, some do not. But generally speaking, how are Chinese consumers feeling as you understand it?
Yes, you're right. From our perspective, I think the consumer sector is showing a lot of complexity in this round of recovery. But just to dissect that segment a little bit more, there are a few key indicators that we're looking out for from a macro level to assess the consumer sector. So firstly, the consumer confidence index. I think everybody knew that the pandemic has hard hit the household sector, and consumer confidence index has been coming down sharply. But at this moment, on the path of recovery, we have actually seen consumer sentiment stabilizing at low levels. So they are not rebounding sharply, neither did they deteriorate significantly from where we are right now. I think the underlying reason for that is perhaps because, as you mentioned earlier, the divergent patterns of the consumption that's been emerging from both the wealth impact from property sector, as well as some of the consumers might have been hurt by the employment pressure as well as income growth. So overall, I think another indicator we're also watching out for closely is the PBOC's depositor survey. On that survey, we see divergence between depositors' preference over saving, consumption, and investment. We have observed wider divergence between saving and investment. But surprisingly, I think the consumption is more or less stabilizing, even though at still moderate levels, but they are on a gradual recovery pattern right now.
Well, you indicated a little bit about the labor market in China, and one of the things that I've read, and I don't have firsthand experience here, is how massively high the youth unemployment rate is. I think it's approaching somewhere between 15 and 20%. I know the government stopped reporting it, maybe for good reason. I don't know. I'm not here to pass judgment on that. But if you are looking for a way for the government to re-engage the youth in the overall economy, did you hear anything in this stimulus plan unveiled in the past week that would address that? It would address the problem with youth unemployment?
Well, yes, I think they did announce something to support the employment, but in a targeted and incremental fashion still. But I think overall, if we look at youth unemployment, yes, it does face more challenges compared to the overall employment situation in China. But I think in terms of for us to see a more sustainable recovery, we also need to see a more broad-based recovery, especially in the service sector, which absorbs the bulk of employment. So on that front, I think, yes, we do need to see more policies to address youth unemployment, but that easing policy could come from a more broad-based way. So this week's incremental RRR rate cuts, in our view, is one way to lift the broad-based sentiment of the economy.
Peiqian, very quickly, the government, we are told, is going to provide one-off cash handouts within the next week to disadvantaged groups. Your thoughts on that very quickly?
I think this is welcomed, but this is budgeted plans. I think there are handouts to the extreme poverty group and needed group every year, and this is just a continuous handout of that finance subsidies of the ministry. But nonetheless, I think it's supportive of consumption overall.
Peiqian Liu, thank you so much for being with us. Peiqian Liu, economist at Fidelity International, helping us understand what we heard in the last week insofar as this massive stimulus plan that was unveiled by the PBOC. Many different interest rates were cut, and the requirement of level of bank capital was reduced as a way of perhaps finding more lending that the economy clearly needs. This is Bloomberg. Let's update our top story. The mayor of New York City, Eric Adams, has been indicted after a federal corruption probe. Let's bring in Bloomberg's Laura Nahmias, who joins us on the line from here in New York. Laura, thanks for making time for us. I'm sure it's a busy night for you. What do we know about the situation?
Well, we know that New York City Mayor Eric Adams, the 110th mayor of New York City and the second Black mayor in the city's 400-year history, has been indicted. We don't know what the charges are. We don't know exactly when the indictment will be unsealed, but a grand jury has indicted him, a virtually unprecedented event in the history of America's largest city. So
that was going to be my question. It wasn't clear to me when the news first broke that it was a grand jury that had issued the indictment, but that in fact has happened, right?
That's our understanding at this point. Obviously, things are moving very quickly, but we understand it's an indictment coming up from the Southern District U.S. Attorney's Office, U.S. Attorney Damian Williams.
What type of investigation has taken place?
Well, we don't know. One of the unusual facts about this is that we don't actually know which investigation this is related to, because the mayor and some of his senior administration officials have been the subject of at least 4 different federal investigations that we know about, 2 of which we learned of just this month. So this could be related to any one of at least 3 that we know were being conducted out of the Southern District, but we don't specifically know which one, and anticipate that we'll be learning more about that in the morning tomorrow.
So my question is on the extent to which we've heard from the mayor himself after this news broke. Has he made a statement?
He has indeed. He is disseminating this statement. Quote, "I always knew that if I stood my ground for New Yorkers that I would be a target, and a target I became. If I am charged, I am innocent, and I will fight this with every ounce of my strength and spirit," end quote.
So you've told me that there are a number of investigations. Can you just sketch out very briefly what we're dealing with here?
Sure. So the earliest investigation that we became aware of was a probe that sort of burst into public view in November of last year. That appeared to be centering on potential campaign finance violations in the mayor's 2021 campaign, the campaign that got him elected mayor, and whether or not there was some interaction with the government of Turkey, potential straw donor scheme, in exchange for doing things favorable for the Turkish government. The contours of that are still a little bit fuzzy. There's been some reporting recently by the New York Times and others that probe had expanded to include looking at Adams's campaign ties to other countries, but that's most of what we know about that investigation at this point. But two other investigations seem to be underway. It's not clear if those actually are looking at the mayor's conduct specifically, but they do seem to be looking at the conduct of people who are incredibly close to him, including the now former police commissioner, Edward Caban, who stepped down just a couple of weeks ago after his phone was seized by federal agents in connection with a potential scheme involving his twin brother. Then the third probe is potentially looking at a consultancy run by the brother of two brothers who serve in senior roles in the Adams administration, schools chancellor David Banks and Deputy Mayor for Public Safety Philip Banks. David Banks, the school's chancellor, announced just this week that he intends to resign at the end of this calendar year.
So from what I understand, the governor does have the power to remove Mayor Adams from office. Very quickly here, Laura, what do we know about the pressure that is building on Mr. Adams to step down from office?
I think it is growing by the minute. My inbox is filling up with statements from prominent Democrats. Listeners may have seen or heard earlier today that Congresswoman Alexandria Ocasio-Cortez, who, to be fair, was not a supporter of the mayor's campaign in 2021, is calling on the mayor to resign. At least two of his potential opponents in next year's Democratic mayoral primary, Scott Stringer, the former city controller, and Brooklyn State Senator Zelnor Myrie have just issued calls asking for him to step down, and so has John Liu, a Queens State Senator.
Okay, we'll leave it there.
Who has not been a particularly fervent critic of the mayor.
Laura Nahmias from Bloomberg News on Mayor Adams of New York City being indicted. This is Bloomberg.
It's time now to get to our guest. Betty Wang joins us, lead economist for Northeast Asia at Oxford Economics. We wanted to talk a little bit more about stimulus in China. And we did have this rather unusual development, Betty, which you don't see all that often in China, that China will give out cash handouts now to people. This is for the poorest among citizens in China. Has something changed in China? Have they flipped the switch?
Well, yes, I think to some extent, at least from the monetary policy front, there has been some change since the Pan Gongsheng, the PBOC governor, took charge. So as you said, the stimulus announced early this week actually came at a much earlier and also even bolder than we had expected, in the sense of the size that they offered to cut policy rate, the broad cuts in the reserve requirement ratio, as well as the adjustment to the mortgage lending and the support to the stock market. And what is more also significant is Pan Gongsheng sent a very dovish signal at the press conference when he announced the stimulus. At the same time, he expressed policy willingness to provide additional support in the future if needed, with the specific measures being mentioned. So I think this is something that has been different from the PBOC's behavior in the past.
Betty, as you know, the sentiment on the mainland is exceptionally weak right now. What is the best way? First of all, let me ask you, how would you characterize what the average Chinese person is feeling economically?
Well, I think that the sentiment is not as optimistic as in the past, a few decades when China just joined WTO and the economy was booming everywhere. And so now it's definitely depends on which sector that we're talking about and which part of the household group that we're talking about. So yes, I think there's something that Chinese policymakers will need to do to restore the confidence, not only for household, but also for the private sector.
Betty, will the holiday next week be too soon to perhaps see a change in behavior by consumers? What are you expecting?
Well, I think that the cash handouts that you were mentioned earlier at the program could be probably serving the purpose of helping with the consumption during the National Day holiday, which is a typical period for Chinese households to go traveling and also spend some money for the celebration. So yes, this is a near-term gauge for us to see if Chinese consumers are able to utilize whatsoever the stimulus. But I think, yes, it's too soon to tell that the policy is effective or efficient enough to do that. And actually, our assessment on the policy stimulus, which were announced earlier this week, would be a bit minimal, at least on this year's growth outlook. And we still maintain our 4.8% GDP growth forecast for China for now, because I think it really depends on how the policy will be implemented or enforced, and also it requires a coordinated or coordination from different parts of policymakers in the future.
Betty, I'm wondering whether or not the biggest risk right now, yes, I understand that there is persistent weakness in the property market, but the deflationary story is very troubling. And I'm wondering whether policymakers in China have been studying diligently the history of Japan and what Japan endured for 3 decades. Do you think this is a part of the thinking right now, that they've been reluctant, I understand, to add to the debt pile, but something has to be done to arrest this deflationary trap?
Indeed, I think this is the biggest concern for me, at least for now, when talking about Chinese economy, and also, as you said, there have been some discussions among Chinese policymakers in terms of whether China is exposed to the similar situation that Japan experienced like 20 or 30 years ago, and even now Japan is still fighting against the sort of deflationary risks, but just I think. So before this round, at least there was still some dissenters saying that China is at a different situation from Japan, and which means that the stimulus might not be needed at a very large scale. But I think what the PBOC has done so far probably suggests that there's a sort of a change in terms of their thinking ways. And actually, during the press conference earlier this week, Pan Gongsheng did mention about inflation, which is an important factor for the PBOC, for the Central Bank of China to consider its monetary policy. And I do think that the policymakers are getting increasing attention or paying increasing attention to this deflationary risk in China.
Betty, last question. When you consider the fact that this broad stimulus package that was unveiled in the last week may function as a large stone that's been dropped into the water, and I'm trying to understand now how the ripple effects will reach other parts of Asia, particularly in a country like South Korea, big trading partners. Same is true for Japan. I'm looking at those equity markets performing very strongly today. Is that on the basis that this is going to have a more widespread impact?
Well, I do think that, the economic recovery in China will have a big impact on its trading partners, not only in Asia, but also the rest of the world. And this is also something that my colleagues are closely watching, for those who are covering Asian economies. But for now, I think we have to separate the near-term response from the markets and also the long-term economic impact on the real economy. So from what we've seen so far, the market reaction to China's stimulus have been relatively positive. If you look at China's FX markets, stock market, I think, yes, in terms of short-term market sentiment has been boosted. But what needs to be seen is if this policy impact will have a long-lasting impact on the broad economy, which is for now we are a bit of cautious.
Okay, Betty, we'll leave it there. Thank you so much for making time to chat with us. Betty Wang, lead economist for Northeast Asia at Oxford Economics, joining us on the line from Singapore here on Daybreak Asia.
Joining us now on the program is John Davi, CEO and CIO of Astoria Portfolio Advisors. John, what do you think? A seasonally tough period, but maybe that offers up some good opportunities in what otherwise might be a good environment for the rest of the year.
Yeah, we're entering into election season here in the U.S. But I think what's more important is not like who becomes the next president, but it's the economic cycle. The Fed is about to embark in a rate cutting cycle. We've got a long way to go because we started at 5.33% in Fed funds, and the market is pricing a couple hundred basis points. So historically, when the Fed cuts, it's usually a new market cycle and new market leadership. So I think it's time to rotate your portfolio.
Yeah, we're going to hear tomorrow from the Fed chairman himself. Do you think that he's going to guide the market as he has recently into accepting the notion that the Fed is going to be fairly aggressive here?
I think it's going to be, more and more about the next, non-farm payrolls, the higher frequency labor data, JOLTS, household surveys, and then obviously any kind of growth data that comes into play. But the market, if you look at what's led since last week, it's all the risky assets, right? Bitcoin is up the most. Here we look at DXJ, which is a Japanese exporters ETF that's hedged. That's up 4%. Bitcoin's up 5.5%. Qs are up 3%. SPY is up 2%. So if you look at M2 velocity of money, that's starting to inflect higher. China's cutting. The Fed's cutting. So we're kind of going back to easier conditions and more looser monetary policy. So I think it's a pretty good backdrop for risk assets. Again, here in the States, we do have this election, so some people don't want to really move before the elections. But I'm expecting there to be a pretty decent opportunity away from the Mag 7, November, December, and for most of next year.
Yeah, when I mentioned seasonal difficulties, I was more or less referring to September, October, but then coming into the end of the year, I hadn't really factored the election. I think, as you say, the elections don't normally play a huge role in markets, although with the spending that both of these candidates want to do, does that raise some other concerns down the road?
It definitely does. I mean, I think that's why Bitcoin is up. I mean, obviously the ETFs, there was a lot of front loaded returns, but I think the Bitcoin market. I mean, look at gold. Gold is up 25%. It's outperforming S&P, and gold is entering to the period that it's actually works the best, right? When the Fed cuts, the economy's slowing. So I think the gold and Bitcoin guys are arguing and gals are arguing that they're very worried about the deficit and this insatiable demand to just spend. So I would definitely, kind of hedge your portfolio risk with some gold. That we always own gold. We're very systematic in our downside protection, and so we've liked gold in the past, and we really like it right now.
We were talking a moment ago about Micron with a revenue guidance here for the current quarter being way above estimates. AI seems to be the dominant theme here. The stock in late trading just soared up 14% plus. How are you feeling about some of these AI-related companies?
Yeah, I'm glad you asked that. I mean, I don't think you should be underweight tech. I think that even though the Mag 7 is expensive, and even though, let's say they've had a hiccup of late, there's plenty of other, growth stories in the U.S. There's plenty of the growth stories within the technology space. So, we run a strategy where we equally weight our technology exposures. We manage this ETF ROE, kind of equally weighted high quality stocks. So each of our tech stocks get 1% weight. And, we track the S&P plus or minus, a couple hundred basis points. I think that's the way to go. I don't think you want to be underweight tech. AI is definitely, a trend. And I think that it's long-term, place you have to be in for sure. I just think that some of those NVIDIA names and Microsoft, I think they just got way too high. And it's a law of large numbers. It's like, how much further can they grow when you start at a 2 trillion, 3 trillion, market cap?
Well, some have fallen a long way, though. Not so much NVIDIA, but it's, I think, still down about 10% or so from its 52-week high. Micron, we talked about that, was over 150, and it was trading at the close today at 95. So, I mean, it's been hammered over the past. So maybe, just maybe, there are some opportunities with really good companies with pretty good prospects going forward that have been sold down, even in tech.
Yeah, I would agree with that. We prefer more kind of diversified, ETF exposure. That's kind of our mantra, but I would rather own a basket of technology stocks as opposed to just, the 7, technology stocks. So I think there's just so much more opportunities. I mean, if you look at earnings estimates, they're projected to be higher from the S&P 493 compared to the Mag 7. So again, it's like just once you're in that upper echelon, it's just hard to sustain the earnings growth. So, and that's what's been happening, right? The market has been broadening out away from the Mag 7, the last few months as we've, as the market kind of rotates into the next cycle and as they discount the rate cuts.
Hey, John, before we let you go, I'd like you to weigh in on opportunities that you're seeing offshore. You mentioned Japan a moment ago. Anything else?
Well, I think, China, if you look at it, I mean, it's, they've rallied on, bad news. Obviously they rallied a lot on the good news this week where they're unleashing more liquidity. I do prefer India over China, but, when I follow the ETF market, you start seeing, emerging market ex-China ETFs launch and they gobble, billions of dollars. I mean, it's just crazy to me to think that, emerging markets ex-China. I mean, China is what makes emerging markets. I don't care, how good the rest of the EM markets are. So I think you need China for, that whole region to work. And, you kind of do need that, for the rest of the world to work, particularly Europe. So, we're global investors. We're always going to be allocated across the world. I've been on your show a bunch of times. Here in the States, nobody really wants to invest outside of these U.S. markets. And, I remember I've been in periods where emerging markets went up 100% over a 10-year period. I'm not saying that that's going to be the case. I just don't think you can ignore it anymore.
Well, you mentioned India. The Sensex has gone from 65,000 to 85,000 in a year. So it's been adds like a 30-odd% gain. John, thank you so much for joining us. John Davi, their CEO, CIO of Astoria Portfolio Advisors.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.